Hey everybody, how you doing? This is Martin Mesa. Welcome back to Mortgage Mind, and today's video is what is forbearance? Okay, so what is forbearance? Forbearance, as it relates to a mortgage, is something that the mortgage company you're obligated to make monthly payments to allows and grants you in the event that you need help making your mortgage payment due to unforeseen circumstances such as unemployment or loss of income of some sort. It's a really popular thing right now because of all the coronavirus lockdown thing that's happening, and a lot of banks, employers are laying people off and they're just not getting paid. So for all those people that are in trouble because of all that, you can actually call the bank, request forbearance, and from my understanding, it's relatively easy to get them to grant it to you. You may not even have to show proof that you've had a reduction of income, but you might need to, so be prepared to do that if that's what you want to do. But anyway, what it does is, and it's for people, like I said, that are in a financial distressed situation. So the good news about the forbearance is that if you call your bank, they grant it to you. You don't have to exercise it if you don't need the help. So you can call the bank, ask for forbearance, tell them you lost your job, tell them your income went down, and they'll probably give it to you, which typically gives you 3 months of time where you're not required to make your mortgage payments, usually for 3 months. And in some cases, they can extend it out further if you need more help after that. But it's usually a 3-month time where you're not required to make the mortgage payment like you normally would be. And if you don't do it, it's not going to affect your credit. It's not going to get counted as late payments on your credit. It's not going to affect your credit score negatively like it normally would, which is great. If you get the forbearance, you don't have to exercise it. You can continue making your payments even though they give you the right to not pay it if they grant you the forbearance, which I always recommend doing if you at all possibly can continue making the payment. And the reason for that is if you choose not to make the payment after they give it to you, after that 3-month period, whatever those 3 months of payments add up to, that amount is not forgiven. You're going to have to pay that back at some point, either at the end of that 3-month period, or they're going to tack that amount onto the balance of the loan. So it's going to have to get paid back at some point, probably when you sell or refinance the loan. So that's the bad news about it. It doesn't get forgiven. So that's why I say try to continue paying it if you at all can. So the other part about it is, if you do exercise your right to forbearance, in other words, not make a payment for 3 months, once you start making payments again on that loan, like after you've gone back to work and your income is back, you're going to have to make 3 consecutive timely monthly payments after your payments restart before you'll be eligible for another loan. So if you've been wanting to refinance that loan because of the low rates right now, you're going to have to wait until after the forbearance is over and you've made at least 3 consecutive timely payments. And then you'll be eligible to refinance that loan or get any kind of decent loan for that matter for a mortgage, whether it's for property you own or to buy a house. So that's what I understand forbearance is about. Hopefully that helps. If you have any questions, feel free to call us or talk to your loan officer that got you the current loan you have. Take care. Thanks again. We'll see you on the other side. And if you like what we're doing, please like and share with your friends and family.